You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the option block.
All right, everybody, that rockin' bit of tunage means it is time to rock out once again with your favorite. Hopefully it's your favorite. I kind of like it. Bi-weekly source for all things options related. My name is Mark Longo, coming at you live here from the Options Insider Studios in scenic and indeed quite sunny and indeed musical. Getting serenaded over here from across the street from Boeing here on the river in Chicago here, a little bit past noon central. In the one true time zone, of course, you guys can get it live, as always. Mixlr, MIXLR is the place to go for that. We are investigating, we are experimenting with some other, Mixlr had some challenges recently, so we're experimenting with some other ways to get it to you live, some other platforms. A lot of those require a video component, and that's not always conducive to what we're doing here, let alone to all of our legion of guests on the network. So we're trying to find some ways to make it interesting, maybe also open it up to some more platforms. But for now, Mixlr.com is the place to go. And joining me on the old program, by the way, of course, however you listen, make sure you hit us up. Those questions, those comments, those insights, those pearls of wisdom. That's how we direct the flow of content here. It's based on what you guys want. So send them in. It's important that we hear from you so we know what you guys want. And joining me on the old program today, let's see. Let's go out to a quiet, a tranquil, some might say a Hobbit-esque type place known as St. Charles, Illinois, where joining us from his Hobbit hole this week, we are joined by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, how go things in Hobbiton today, sir?
Hobbiton, huh? That's a new one, gotta say. All is well, everything is awesome, and what the heck? The market, the SPY is back up above 290. What's not to be happy about?
Indeed, and right after the show, you can have luncheon in the Levensies, so you'll be a very happy camper. All right, and also joining us, going around a little bit farther out, beyond the hinterlands of Chicago, all the way out, almost to the hinterlands of the great U.S. of A., where we are joined right on the coast, right before it all ends, right on the edge there. We are joined by the Rock Lobster himself, Mr. Andrew G. from OptionPit.com. Mr. G, how are things in the land of Maine, and how goes the ever raging battle with the scourge, the great American scourge known as clam pirates?
The clam pirates, they are piratey. What can I say about it? They're taking all the stuff and running. No. It's things are going okay in it. They are going A-okay.
So many national issues moving to the fore these days on various levels. I don't feel clam piracy is really getting the mention and the heat and the attention it deserves. So hopefully you can shine a light on this national scourge known as clam piracy. As we keep on rolling, let's find out where I believe he's part of the Jacksonville crew. Let's check in. Mr. Colin Songer holding down the hot seat over there, the Fidelity Active Trader hot seat. Mr. Colin, welcome back to the show. And I forget, are you joining us from the Jacksonville crew, or are you elsewhere?
No, I'm up in New Hampshire.
Oh, you're the New Hampshire. That's right. You're New Hampshire. The other guys are Jacksonville. That's right. So you're getting heat, but a different kind of heat.
That's correct. A little bit of rain this morning, but it's the sun's out, so it's all good.
Are you also dealing with the scourge known as clam piracy in New Hampshire, or have you guys beaten back the waves for now?
I think they've beaten it back. I haven't heard about it over here.
There you go. At least New Hampshire. Maybe Maine can learn a little bit from its New England brethren there how to defeat the clam pirates at their own game. Meanwhile, there's a lot of other types of piracy and madness and craziness going on in the market, so let's get to it as we roll on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, let's get to it. What the heck is trade and what was lighting up our screens? And I can tell you right now, it's a whole heck of a lot of green on the screen today. We had that. It's been one of those weeks, a wild week. Right about this time last week, right about middle of the show last week, is when Trump made his now infamous tweet about the tariffs and about exacerbating the trade war, and we kind of were off to the races from there. Volatility shooting up, market shooting down. That continued at the beginning of the week. We saw pretty massive, pronounced sell-offs, and then we saw a little bit of rallies, and we saw a big sell-off again yesterday. Then not so much. It pretty much wiped itself away. So a big down move, pretty much wiped out, and then today now we're off to the races again, to the upside. All the major indices up and up strong. S&P up, 1.5%. The Dow up about almost 1.25%, and the Nasdaq leading the charge to the upside, up over 1.75% at this point. So a lot of that red getting wiped off the tape today. So I guess depending on where you live, if you live in the Uncle Mike camp, or if you live in the dark, cynical, bearish camp of the Rock Lobster, I guess depending on where you live, that depends on whether you have a smile on your face today or not. Of course, our old friend VIX Cash, if you're long a lot of upside in VIX, maybe not so much on the smiles today. VIX Cash, 1760 off nearly two handles today, which effectively puts it, only four handles below where it was last show. So beginning of the week, it was north of the 20 handle again, to over 21, now back down to a comparatively reasonable 17. Our old friend VVIX now taking a bit of a break as well, down shy, actually right about just at the triple digit level, right at just a little bit shy of 100, but pretty much right around 100 coming into showtime. And our old friend VXX also, VIX taking a breather, Vol taking a breather. VXX is going to take a breather as well after threatening to break the 30 handle through to the upside again this week and kind of go back to that level everyone always watches, now back down to about 26.5, down about a point from where it was this time last show. So let's go back around. Let's mix it up yet again. Let's go back first to the land where they have defeated clam piracy once and for all, also known as New Hampshire. Mr. Collins, sir, what is lighting up the tape over there in the land of Fidelity, sir?
So Fidelity customers have really been focused on the top spot being covered by Roku. Releasing the earnings, smaller than expected loss. Roku itself has popped up from them releasing their earnings. So it's right now trading at 121.53, up 20 spot 5.6, which is over 20% up. Right now, it created a new 52-week high, as well as above all its moving averages. And the call to put ratio sitting at 1.37 calls to 1 put traded versus its 90-day average volume, which is just slightly higher at 1.43 calls to 1 put. Next on the list was Advanced Micro Devices, AMD, that making the cut. On the back of news that it landed Alphabet and Twitter as customers for its second-generation processor chip. Now, that's currently trading at $33.74, which is up about $4.56, which is well over 15% up. So a big move there. Right now, it bursted through its 20-day moving average, and it's above its 15,200 as well. Interesting enough, the volume call to put ratio sitting at 2.75 calls to every 1 put traded versus its 90-day average of 1.7 calls to 1 put. So really a lot more activity today than its average. We had some usuals show up. We had Amazon pop up in there in the third spot. That's trading at 1825.61, which is up a little over $32 per share, and that equates to about 1.75% up. It's holding above its 200-day moving average, but it's still lingering below that 50 and below that 20-day moving average. The volume for the call-to-put ratio is sitting at 1.38 calls to 1 put traded versus its 90-day average of 1.32 call to 1 put. Kraft Heinz making the list, not necessarily for good reasons. So they released their preliminary first half results showing net income being more than halved. And apparently they're going to be a little late on filing their 10Q. So right now it's trading at 27.58, down $3.28. So, down over 10%. It created a new 52-week low today, and it's below all its moving averages. Interesting enough with the call to put ratio for today, it's 1 call to 1.07 puts traded versus its 90-day average of being 1.3 call to 1 put. So it's actually going inverted on that. And one of the other usuals making the list was Apple. Apple trading at 202.1, up $3.06, which is just over 1.5%. Now, right now, Apple is sitting below its 20-day moving average, but it is holding above its 50-day moving average. Call to put ratio sitting at 1.21 calls every 1 put traded, which is just a tick higher than its 90-day average volume call to put ratio, which is 1.16 to 1 put. So that's what Fidelity customers have been trading so far here today.
Thank you for that, sir. You mentioned AMD. You're right, AMD lighting up the tape today. Big day out there. AMD is always of late kind of been in a perennial top 3 player out here in terms of overall volume. Today is just it's dominating the tape with an exclamation point. I'll just spoil it for you now. They're number 1 with a bullet on the top 10. Let's do the top 10. Let's start at the bottom, and we'll get to AMD at the end there. Number 10, Bank of America, 106,000. Number 9, Uber and Baba fighting for that number 8, number 9 spot, both at 107,000 contracts each. Number 7, Amazon, $1.50 on the tape. Number 6, Netflix, $1.16. So not much separating the bottom half of the top 10 there. Number 5, Microsoft, 149,000. Number 4, Facebook, $1.71. Number 3, Roku, 196,000 contracts. Number 2, usually number 1. Number 2 today, Apple, with a paltry 336,000, because AMD not quite doubling it, but pretty damn close. 647,000 contracts on the tape, just coming into a few minutes ago, actually. This is an updated list here. So, yeah, that's a lot of paper out in AMD land. 73%, as Colin alluded to, 73% coming on the call side. So not only is it the most paper on our top 10, but it's the most biased as well, which is kind of interesting. AMD just on fire out there of late. The big trade out there today, well, there's a bunch of trades. Most of them are 3,000 contracts around or less. The biggest print, 5,200 of the Nove 34 puts. So pretty much Nove at the money, slightly in the money puts. The stock's at about 33.75 right now, listeners. These are one up tied 5,200 times. So buying puts and stock at the money puts in stock in November, which is kind of interesting. Looking probably like they're looking for a little bit of movement, a little bit of perhaps continued upside there, which is kind of interesting as Well, before we break down some of the other fun stuff, let's keep going around the horn. Let's go out to the land where they don't know anything about clam piracy because it's Hobbiton. It's just a happy, idyllic place to live. Mr. Uncle Mike, sir, what is lighting up your tape out there in Hobbiton today, sir?
Well, I have to say, I was not expecting, when I woke up this morning, I was not expecting to talk about Hobbiton and clam piracy, to say the least. That's for sure.
You never know where I'm going to go on this show. That's what makes it fun.
For sure. A couple things I think are going on right now. We have 2 days of pretty significant upside in the market. And with that, I think that what needs to be of note on this is that this is a more volatile market. We're having more daily bounces one way or another. So make sure that you're prepared for that with whatever type of volatility you're selling, whether you're looking to do calendars, whether you're doing verticals, whatever the case may be. Just have a feel for that. And then just make sure that you're staying safe throughout all this. If you are doing verticals, don't let them go in the money. With Trump tweeting today that it seems like now he's at war with the Fed. It seems like he's trying to rally the Fed to get lower interest rates so he can really go full war with China. Full war, but full trade war with China if he is not already. The news, of course, not today, but a few days ago about how the yuan was considered a manipulated currency. I think that's something to be that really needs to really be taken note of and continue to be taken note of over the course of the next few weeks of trading. That's very important. Also, there's the shiny stuff, silver and gold, for example. They have definitely had a little bit of an uptick recently. I'm curious to see if SLV can hold the 16 level or get back to the 16 level. We did cross it yesterday. I'll be curious to see if they can make another run at it with where they're going. So a lot going on, to say the least, and we'll see where this goes.
We shall see, indeed. If you like all the shiny stuff, stay tuned for TWIFO. In a little over an hour, we'll get into that. Some interesting reports coming out of our friend Blue over there at CME about the key drivers for gold in this environment. Interesting stuff. So stay tuned for that. But let's keep going around the horn to the land of the options mecca of the U.S., at least according to Google Trends. B, unfortunately for him, the mecca of clam piracy, and C, a place where they talk a little bit about VIX. Mr. Rock Lobster, sir, what is lighting up your tape out there in the land of Maine, sir?
This would be the part, yes. I literally was pushing my phone 500 times to get the thing in.
I forgot to mention, number 4 that's also the place where they cannot figure out the mute button. That is Maine.
Yes, of course. It's always, I'm doing the show that I'm like, then students are asking me questions about rolling. So, clam pirate. What's funny is we had such a storm this morning that the clam pirates couldn't come out because their boats would have filled with water. We had the Noah flood. As far as vol goes, I think we had a peak in VXX yesterday morning at 30 and change, and we are down a solid 15% for VXX. So those vol futures got smoked. You probably are looking at the weirdest VIX curve in history right now. I think that December is the lowest price future. So maybe everybody thinks that this will all be fixed by December. I know there's some seasonality and stuff there, so I thought that was kind of funny just as a side note. As far as vol goes, to be honest, who knows? The thing is, okay, now the Chinese are mad, Trump is mad, everybody's mad about the trade situation. The Treasury collected $60 billion, and I think, both sides are digging in their heels, and everybody's just going to accept some kind of less economic growth, Where does that leave stocks and where does that leave the market? I don't know, but that's certainly not the go-go, bust out the 3,000 hats so TOSAW can say we're at all-time highs again. It still leaves us, I think, with a little bit of turbulence going forward. Even this rally is a pretty hard rally. It's a high-vol rally. So, I think I like the idea of, put spreads and stuff like that, selling put spreads to get long right now. Just because I think we need something to settle to get to those lofty new levels. So, that's the kind of stuff. Definitely more cautious, more out of the money. Things are pretty juicy. I don't say this, but this is probably like an ideal time for an iron condor. With the Chinese have basically taken the upside out. They're not coming to the table anytime soon. You got September to the next deal, so I think you could have a lot of sideways up and down action. So normally I would not say an iron condor is a very good trade, but I think that type of trade would work well right now. And as far as VIX goes, even this week, could you see the 16 handle? Why not? We're trading just barely 17 right now. We seem to be losing about 1.5 per day. And that bottom will be, I don't know, maybe next week you could trade 14, 15 if there's no more news, because everybody's like, okay, they're going to keep arguing until they come up with some kind of compromise. And, and I think every little news snippet moves VIX 1 point up or down one way or the other. So as of right now, the worst problems have not materialized, at least yet. At least yet. There's a lot, there's a lot of financial press. They're not too happy with the president anyway, so they will kind of pump out the next recession's coming. The China-U.S. trade war is causing a recession, and so you see some of that sentiment happening. But I mean, it's hard to have worse sentiment than we had on Monday morning. We had that awful weekend of shootings and trade war tweets, and could you have more worse sentiment than coming in on Monday morning? Everybody's like, sell, sell, sell. It reminded me of when oil. Remember we had that offshore oil. What was it? The Horizon. I can't remember.
The BP Horizon. Yeah.
Yeah, that was. Remember how bad the sentiment was? Everybody's just watching the oil pour out of this well, and the market was down. Everybody's just grumpy that the ocean was filling up with oil. It was just. I just remember it was that kind of sentiment where everything just seems kind of dark. And then just as time goes on, people get used to it. So, but I feel like that's what it is. And you could see, a 16 or a 15 vol pretty easily. I mean, we traded 12.30, the day before the Fed announced their thing. So I think Donald wanted interest rates lower. He's going to keep making everybody miserable till he gets them. So
a 15 handle would be pretty much in line with my VolViews crystal ball predictions, sir. So I would not be averse to such a prediction.
We have another rally like this, and I don't see how we're not going to be in the low 16s tomorrow. So
you're right. We are kind of rallying like all is right with the world again. And even though none of the underlying issues that really caused the sell-off have really been mitigated in any appreciable way, yet we bounce off those levels and we rally, and all apparently is right with the world. Again, you mentioned the low level of the D's futures out there in VIX. That's something we've been commenting and remarking about on VolViews for some time. It seems like the market just has forgotten what's happened the last couple of Decembers. I get it, seasonally, VIX not exactly lighting up the tape usually in December, but still, when you could roll from July to September and almost get a credit, that's a crazy scenario. I think just by pretty much any metric. Speaking of metrics, you mentioned your friend VXX. Your crazies there in the pit chat love to sling themselves some VXX. They must have been super happy about that rally up to 30 so they can kind of get back in, or was it the other way where a lot of them, were they so heavily downside that they didn't have anything in their back pocket for when the worm turned against them, sir?
No, I think we had actually tons of upside. I sold a little bit too much too early, as usual. I always do. But yeah, for the most part, we had a lot of long vol that we were able to write up. I did not close the last of it yesterday morning. I had enough to keep on, but really not enough to close because we do have so much. Still have a bunch of downside puts, and we still have a month to go for vol. So it's like one of those things where you have to keep some sort of remnant of long on, and that's what it was. So. And we'll see what happens. But, yeah, it's not going to surprise me. For the most part, I think the crazies in the pit chat did okay. And nobody was over – well, I can't say nobody, but, nobody's really overly long into this. So
the Rock Lobster never met a penny's worth of profit, that he did not want to take. There you go. That's the diehard Mainer in him now, taking those pennies off the table. Let's see really quickly. I mentioned the individual most actives. Let's look at how the indices are faring coming into today's show. And this is actually an updated list as well. So this is just as of a few minutes ago. VIX with about 475,000 contracts. That's pretty robust given this time of year. Also, the ADV now 638,000. You know that's up a couple of 100,000 almost from just in the last couple of weeks. So that ADV has skyrocketed over the past week and change. So that's 475 is a very strong number. Number two, we got SPY here, a little over 2 million, 2.15 million. The ADV about 2.7 million. The S, aka the SPX, 834,000 on the tape. ADV right about 1.3 million. The Qs, 577,000 contracts on the tape. ADV 668. And the Russell, aka IWM, 203,000 contracts on the tape. 412 is the ADV. So Russell, kind of a bit of a laggard out there here this week. Really quickly, obviously a lot lighting it up on the earnings front as well. Everyone was talking Disney. They popped off on Tuesday. They, surprisingly, as someone who's been there a number of times in the last year, I was kind of surprised that the parks weren't faring as well, given that they're pretty crowded these days, but apparently not as crowded as they could be. So maybe all those massive price hikes had something to do with it. Go figure. But let's see. Today, after the bell, we have Uber. We've got Activision, Blizzard. We've got AMC, Kraft Heinz, another interesting one. We'll get to them more in a little bit because things ain't exactly looking good for them. If you like all the earnings move results reports, you got new ones hitting the site today over there, courtesy of our friends at ORATS. Click on that options news and articles tab at the top right corner of our homepage. You'll see it there. You're off to the races. Let's see. We've got one here. This is we'll save that for around the block when we get to that because I don't want to tease Uncle Mike with Cisco here. Let's look really quickly. AMC reported this week. They're about a $12 stock, so there wasn't a heck of a lot lighting it up out there. KHC and good old Kron are on the earnings movie. Also worth noting, if you want to check it out, listeners, a new thing. I think they just started doing this. This is the earnings season report. So they break it down by season and by week. So far there's obviously 6 weeks here to the season. Kicked off the 12th of July, and it shows how many big firms we're yet to report, how that number kind of dwindles down over time. The implied move percentages, past move percentages during that entire week. Just craziness. The percentage of firms that reported, number of firms, actual moves. There's a lot of data here if you are indeed so inclined. So check that out. Also, the historical average compared to previous weeks. So they're crunching a lot of data for you guys, and they're making it all available to you guys for free, so you probably should check it out. If you're interested in this kind of thing, and I know a lot of you are, theoptionsinsider.com, and then click on the Options News and Articles tab up there, and you'll find all the earnings move and results reports and all that good stuff. Let's keep on rolling, though. It's time to get weird. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get weird. It's time for the Odd Block. Going to kick things off. Everyone's got their radar, including, I mentioned just talking about our friends at ORATS. They're actually coming out with other data now. They're doing some unusual activity stuff as well. So you can check out their unusual activity reports, options, and names doing more paper than normal out there. And Kraft Heinz, like I mentioned, we're going to come back to the Kraft Heinz lighting it up yet again today. Kraft Heinz coming into showtime right now, off about 3.5 handles, right around 11%. Trading right around 27.5. This is the name that a year ago, if you followed this sordid saga, was trading a lot more. Was trading for 60.25, so more than double. And they've kind of had a rough hit. They got hit pretty bad back earlier this year in February when they fell from about 48 down to about 32 in the span of about a session or two. And they've kind of been drifting to the downside slightly ever since, and now down to about 27 here. Of course, a lot of that driven by this investigation that was disclosed right around that time frame into their accounting practices. Never a good thing. They said they're going to slash the value of the firm by about $15 billion. And they ended up, they had to restate. That's never a good thing either. Restate their results for 2016, 2017, and for the first 9 months of 2018. None of that is good, and it sounds like the saga is continuing today as the stock taking yet another beating. It's doing over multiple times its average volume right now. And let's see, coming into they have it profiled for yesterday's paper because that's what kind of caught their radar. Today is the second highest volume one already on the tape, even with today's action. And let's see calls. Actually, puts were out leading calls, which is kind of what you'd expect given today's mostly downside move. He highlights the number one volume strike being the $30 strike, I should say, out here in AUG. Let's see. We look at some trades out here as well. And the big print coming into right now, about partway through the show out here in Kraft Heinz, are the AUK 22 half puts. So fairly decent, about 5 handle out of the money puts here in October. These are going up for 41 cents. Market was fairly wide when they went up. There was 35 cents at 50. So 41 is not quite mid-market, but pretty darn close. Biased towards the bid. This is obviously after the earnings that were before the bell here today, before the open. So interesting stuff here coming out here. Opening on the Philly, so not closing on the put side, but opening about 3,000. So maybe someone drawing a bit of an aggressive line in the sand, 5 handles out of the money. They figure this thing gets cut down to 22.5, minus 41 cents. Then they're okay picking up a few shares here. Also worth noting some interesting deep calls. The June 2020 15 calls going up for 1205, almost 2,000 times, 1,999 times out here. So 15 calls, they're about $12 in the money. So 1205. That's interesting. When this went up, obviously the stock has been moving a little bit since then. That was also opening as well, which that's a weird one. I'll have to go check and see if there's any boxes. We talked about box trades on this show before from Fidelity. I have to see if any boxes are lighting it up, because that's the kind of leg you might see go up in such a thing as like a box, a deep in the money call like that. Mr. Rock Lobster, has Kraft Heinz been coming on your radar here, and have any of your crazies in the pit chat been slinging it? B, and then C, what do you make of these in particular, these crazy deep calls in June, sir?
Kraft, an idea we had in the pitch chat was buying the October 35.30 strangled. It was less than $2 2 weeks ago, so that paid a little bit. I have kind of this weird strategy, what I call like a dividend plus strategy, where you buy the stock and then you take part of the dividend proceeds and you go buy option premium with it when vol's super low. So that certainly helped out if you wanted to go long that particular stock where it was at the time. But I can't figure out what's going on. I mean, there is a dividend there. It's another one of those things where if it becomes hard to borrow, do you think somebody's doing the deep option for some kind of squeeze or short squeeze play or something like that? They don't want to be squeezed out of their stock. That's the only thing I can really think of on that one, because you thought all the bad news was out with Kraft, and now it's pretty weird for a Warren Buffett company to just everybody just to throw up their hands and say, "Oh, we don't know what's going on here anymore." That's not the typical MO for that guy.
No, that is a bit unusual for him. And this is, I'm looking at it just now, this is not done as part of a box or anything. I mean, it might be a stock replacement because it's out about a year, but that's pretty meaty for a stock replacement. Why you want to pick up an option for $12? You can do the stock on margin for not much more than that. So usually the stock replacement is a little bit favorable to the stock on margin, and this is not exactly that. So this is a weird one. You're right here. Oh, I should note the way this went up. Looks like it was maybe a sale here as well on the calls. They went up for 1205, but again, these are deep, and the stock was slinging around. So I take some of those executions in the post earnings rush of madness with a bit of a grain of salt here, but a weird one. I may have to Have to mark that one in our tube. Of course, that's all the way out to June of next year, so we'll have a long time before we come back to that one. By the way, Options Game, he usually comments on our TWIFO show, but he was listening here about the craft. He said, I wonder how they're doing this poorly. I keep buying ketchup and mac and cheese from them, so they should be doing good. So apparently all his ketchup buying and mac and cheese buying. Are you a big ketchup and mac and cheese consumers in your household, Mr. Rock Lobster?
We are, actually. Ketchup and mac and ketchup is like a kid staple. You can't have a kid without ketchup. Like, they come with a bottle of ketchup.
Yeah, you're right. Ketchup and mac and cheese are kind of par for the course when you're talking the 10 and under crowd out there. All right, let's keep on rolling here. Let's keep in the K's. Why not? Let's stay alphabetical for the odd block today. Let's go on out from Kraft Heinz to Kroger. This goes back to, I was just talking about watching some names. This is the name we highlighted back in May. And we touched on them once, and now these puts went away, so we can talk about them a little bit more. This was back on May 20th. What we saw were some the Rock Lobster staple, a.k.a. looks like the line in the sand puts. At the time, we saw 10,756 of the July 26 puts going up for $243. That was actually below the bid back on May 20th. At the time, the stock closed on May 20th at $24.07. So these are already a couple of bucks in the money, hence that relatively juicy amount of premium out there in Kroger. And we talked about this one back in June, on June 27th on the show. We kind of did a check-in on it, and those puts were still open. And looks like this guy was pretty much on the wrong track from the beginning. He sold it in the money put, so you got to imagine maybe his inclination was he wanted to get himself some stock. And if that was the case, then he probably succeeded on this bad boy here because, the stock from that level back in May, it pretty much never looked back. I said it closed right around 24 on the 20th. 24.07. Sold off within a couple of days down to about 22 and change. Then it rallied back up to 24.60. So he had a chance to, if he wanted to close these out for a better level, he could have. I don't think he would have made money, but he would have done maybe a little bit, not worth his time for 11,000 contracts, but still decent. And then it kind of just started selling off again and never really looked back. A couple of days later, it was down. By the end of June, certainly it was down about a month later, it was down to 21 and then got down to 20 handle, and it kind of been vacillating around there. It actually rallied the last couple of sessions up to 23.25, but that's not where we're interested because these puts we highlighted went out in July. And so let's look here and see on expiration in July how things fared. And lo and behold, the number one option out there really were the Jan 30 calls. 46,000 of those were right behind them, hot on their heels, were 27,500 of the July 26 puts. So these bad boys went out. They went out 26,000 of them. Actually, we profiled them on the 20th with about 17,000 of this traded. The next day, the 21st, 26,000 more traded. So for a total, bringing the OI up to about 36,000. So a lot went up. We only focused on that first blush on that first day. A lot more went up the second day. So there has been some back and forth on this strike here. And then by the 10th of July, getting close to expiration, that OI was still pretty robust, about 28,000. So they had whittled off about 8,000 that they had added on from 36,000 down to 8,000, but still quite a few. And as of expiration, 26,000 were still open. The stock, also worth noting, was well shy of that 26 handle. The stock went out at about 21.69 on expiration, though. So these puts were worth about 431. So if this guy's goal was to buy himself some stock, that's pretty much what he did. Because, aside from a few thousand that they closed out or maybe were just part of back and forth trading, looks like all of these puts went out with some stock attached. So I guess it depends on your MO, Mr. Rock Lobster. If he was working a buy in the stock, then he got what he wanted. But, we always talk about these lines in the sand stir, and sometimes you got to have a plan for what to do when they're crossed. In particular, if you're writing these things already a couple of bucks in the money, I got to figure you're leaning towards getting yourself some stock. Would you concur?
I don't see how you can get yourself around that one. On that, I think you're pretty much. I feel that you are committed on that. So I mean, line in the sand puts are line. They're not. Don't give me any stock puts. They're line in the sand puts. You know, they're. We call them that for a reason, because that's what they are. They're line in the sand puts. So, what I would say on that is, real simply, that the seller wanted a bunch of stock and they got a bunch of stock. So it's a lot easier to sell puts when you expect to get the underlying, but sometimes it can make you a little grumpy on the price that you actually get it at.
Yeah, this guy was probably grumpy because, traders are a grim lot and they don't like buying stock at a higher level than perhaps they needed to, and certainly he could have gotten a better price if he had waited, but that's what happens when you draw a very aggressive, and our friend did, very aggressive line in the sand. So just if you're playing the home game, we had a lot of very near-dated paper. This one was a little bit longer term, so up in May, but we've been talking about a lot of paper lately, kind of checking up on it, and most of them, this one you kind of have to classify with a bit of a caveat, because if he wanted the stock, he got what he wanted, but still, most of them have been on the losing end. So again, going back to that caveat we always put out there, size money, not always smart money. And we're just showing you a bunch of examples of that, at least so far here. Let's wrap it up with another name with the K at the end this time. This is one of those rare mega symbols here, LBTYK, for Liberty Global PLC Class C shares. Said that 5 times fast. Trading today right about $26, up about $0.75 bucks. But we're not looking to today. We're looking back. First off, we first profiled this name back on the 18th of April, and at the time the stock was trading $26.66, so not that far from where it is, a little bit north of where it is right now, but not a ton. At the time we profiled a big trade for a name like this. There were the July 30s going up 19,561 times on the offer for 55 cents. This was opening over there on the Philly. Excuse me. And let's see, the earnings, this was an earnings play because earnings were involved. Of course, that long of a time, you're probably going to get a couple, maybe at least one cycle in there. And they got one on the 6th of May. And let's see how this name has fared. Obviously, it's pretty much a little bit north of where it was back then, or I should say a little bit south of where it was back then. But other than that, not a lot has changed. Let's look at the July 30s. So it doesn't take a genius here. Let's look here. It's sold off not that long. By June 3rd, it was trading 24, almost 24 even. So those July 30s were not looking pretty good. And then it rallied again up to about 27 looks like about 27.30, I should say, was about the high. But that hit that level. So about 27 was the high, actually hit 27.05 on expiration. But that was obviously too little, too late. If I had done that maybe a month or so earlier, I might have had a chance to get out of these for some semblance of profit. But that apparently was not. The option gods were not smiling on this one either, because on expiration, guess what was the number 2 position in LBTYK? Yep, the July 30s, 25,000 of them, 25,520 of these. Going out worthless on July 19th. So we're 0 for a bunch here, Mr. Rock Lobster. It's kind of depressing, putting the lie to that. I mean, a lot of smart money doesn't go up in the options market, don't get me wrong, but certainly not all of it, sir.
I think that's a part of the problem, too, is, you look at this stuff, and it's also what people are looking for, when they do these trades. Is there stock against them? A lot of funds, they have a strategy that they're trying to accomplish, though. But with Liberty, I'm still trying to figure out how they're actually if they buy those calls, what's their win, right? Did they go through all that trouble just to sell stock against things, or what's the? That's one of those ones where I don't see how. How all that works, but it's the big dollars don't necessarily, but make money. However, also you're thinking how much is that relative to how big their fund is or something like that. So 28,000 for them might not be a huge number, but. Again, it's a big chunk of money just to kind of wither away and die, so to speak.
Yeah, fortunately, or maybe fortunately, depending on your opinion, we'll see. We're not withering and dying. Nope, we're going to keep on rolling. right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, let's do it. Let's get to your electronic mails and tweets and whatnots. Oh, yeah, we got all sorts of interesting stuff for a slow news day. That's not today, really. Not rock'em sock'em, but it's not slow. Let's see, midpoints. Let's go to this one. I've held off on some of these epic questions. Let's see if we can squeeze at least one on. Steven Tresser wants to know, Mark. Well, hello, Steven. He said, love the podcast and have learned a ton from you guys. I have 2 questions about protecting profits with puts. Number 1, I've heard you mention around 2% as the appropriate amount of premium to pay to protect profits in a stock. Is this 2% of the overall position or 2% of the profits? Second question, how would this apply to profits in a long call? Say I am up $10,000 in a long call position, and I think it still has some upward run. How do I figure out how many at the money or slightly out of the money puts I need to protect some percentage, let's say 50 to 100% of that profit? Thank you, and keep up the good work. Great show. Well, thank you, Mr. Tresser. Right back at you. We love you. You got a lot of questions here packed into your 2 questions here. Let's see. I've been talking for a while, so I want to make sure you guys get a chance to have at this. Maybe we'll start in the hot seat, because I have to imagine, Colin, you guys get almost this exact question on a regular basis. In fact, I know some of your cohorts have said they've been getting a lot of questions about hedging and puts lately, so I got to imagine maybe this exact question has come across your radar perhaps this week. So when someone calls up the hot seat, Colin, he says, hey, I'm up. Maybe you, first off, maybe you have a different percentage. Maybe you don't like 2%. Maybe you have some other percentage for protecting. So if you have a different percentage, have at it. And then walk Stephen here and our listeners through how you construct that.
So anytime when we're discussing hedging, a lot of times we conceptually will draw them out of what they're trying to really accomplish. So whenever they're discussing about, 2%, it sounds like a very specific of what they were looking to target with it. But I would say, really, in essence, if it's really 2% of the profit that you're identifying, that you're trying to protect, obviously that's going to help you identify what level that you should utilize. So if you're really driven based off of the price level it's at, and then 2% from that level, you're actually choosing that strike almost in the process of accomplishing and listing out what you have in there. I would like to answer number 2 really directly in terms of using long puts to protect long call profits. We get that call surprisingly and high frequency, where, if it's something where you're going, those long calls are deep in the money, and it's already trading basically like stock. Well, what is stock when you buy a put? Well, it's synthetically a long call. So in essence, one of the things that I would say, if you're looking to protect profits that you've accumulated on a long call, say $10,000, and want to take half of it off, just roll up your strike on the call. And that way you're taking half of that profit on, you're leaving the trade on, but you don't have to pay for anything. I mean, you have to pay for the new call that you're purchasing, but you're not using option on top of option to do it because it changes the dynamic of the trade. But I would state that, instead of using the long puts to cover the profits on the long call, look, just roll up your long call strike. You're giving up directional exposure, but if you're buying a put, you are giving up directional exposure anyway. So instead of buying puts on it, look, just roll up that strike, and that way you're taking off half the profits, and you still are leaving yourself that upside potential on the trade.
All right, well said. Let me just clarify for Uncle Mike and for everyone else here. I think what Steve's getting at here with that first part of that question is people ask us a lot on this network, hey, I got this portfolio, XYZ, whatever it is. How much should I reasonably expect to pay to hedge this thing for X amount of time. And obviously that's a completely moving target because there's a legion of variables, how far out of the money, how far out in time, how much you want to protect, all that kind of stuff. But we've thrown out in the past a number around this 2% as being kind of a decent barometer for expected expenditures. You can pay more, you can pay less, but in general, I think that's what he's getting at versus a 2% drawdown in their portfolio. So a little bit different. Uncle Mike, I'll give you a chance to swing at this one next. First off, do you concur with that 2%? Maybe you think it should be more or less. And then B, what do you think about the second part as well that Colin just hit on, using the puts to hedge the calls effectively?
I'm going to go B, answer B, then A for this one, because B is going to be a little bit shorter explanation.
No love for A on this one. Everyone's going to B first.
Of course. I agree with Colin in that regard. The only other thing that I would add to it is that in terms of just rolling up a call, yes, what he said exactly. The only thing that I would add to it is that the other thing that you could do if your calls are deep in the money and they're like stock and you want to take something off the table, let's say you have 10 contracts on the table, sell 5 of them, sell 6 of them, sell 4 of them, whatever, to manipulate the number of contracts with which you're using. So that would be the only other thing that I would add to that. In terms of choice A, what I like to do, if I'm starting off unprotected on long stock, oftentimes what I like to do is collar it when it gets to a certain level in terms of where it's at. I like to pay nothing out of pocket as best as I can. Some wise man once told me to try to get your juice for free, and I really like that idea. I think the question for me typically is, what juice do I want? If I'm concerned about a short-term pullback, I might do a knockout collar, meaning I'd buy a put spread and maybe sell a call to where I'm protected for like maybe a 5 to 10% pullback on the stock in case it had its run, but I still have a little bit of upside on it. If I'm concerned about it going way down, I'd do a traditional collar. So I like paying nothing as best as I can. If I were to pay something, if we were in a market like we were a few weeks back when volatility was very low, I would say 2% is a fair price to pay. But I would do everything that you can to try to get your juice for free, especially if you've already locked in a profit. Because if you've locked in a profit, then maybe giving up a little bit greater of a profit might not be a bad idea. So I like those, and those are my 2 cents.
Really quickly, Mr. Rock Lobster, do you have any 2 cents to add before we keep on rolling into Around the Block?
Wow, I know. I'm trying to think. You guys did such a good job of hitting all that stuff. One thing I would say about placing a put, if you're going to spend some money on one, is you place that put where your risk tolerance is. Meaning, like if it goes below here, this is where I want to be protected. So you have to have a pretty good idea of what you want. If you're going to buy a put, what you want it to deliver. And I usually use it just as a stop. So I go, I will give up this much profit if it pulls back, but I don't want to give up any more past this point. This is where I want the whole show to end. So I think you have to be very specific, and if you're going to use a put, to use it the right way. So you basically it's loss stoppage, right? So you're looking for upside gain still, but you want to stop a loss and you want to have that specific point. So I think that's the thing. You don't want to let your lot, you don't want to take all your gains and turn them into nothing. So put that put where you believe it will do the most good for you.
Put that put somewhere good. That should be the title of a webinar somewhere. See, Stephen and the rest, you write an epic treatise, you get an epic answer. We got to keep on rolling, though. We got to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Let's go around it. I mentioned some of the names popping off after the bell today. Big ones today. We've got still Uber. Everyone's waiting for that one. Activision, Blizzard, AMC, Kraft, Heinz. I think we kind of saw that was, of course, before the bell, so that one we've already seen. But a lot of names popping off after the bell here as well. Looking at the earnings move reports, there's a bunch popping off next week. Keep an eye on the reports. Are up now for Walmart on the 15th. They're pricing in, looks like about a 4% straddle. They're trading about 108. The straddle a little bit north of $4. Baba, 159. They're pricing in a little more than a $6 straddle. That's up about $1 and change from last time. So Walmart's actually a little bit lighter than last time, and or I should say the average. And Baba is actually $1 and change more than their past average earnings move. Cisco, cover your ears, Uncle Mike. That one's about the same. 52.30 is when they did this report. The shadow is at about 234. That's about 10 cents more than it was over their average. So not a ton going on there. TLRY, a name a lot of people like to watch out there. 41, almost 42. Coming into this report, they're pricing in about 360. They've averaged about 340. So not a huge amount of extra juice there either. Just a few to look at. There's a bunch more on the tape for next week coming up. Also, again, check out that earnings season report. That's pretty interesting stuff out there. Let's keep on rolling. Let's go back around the horn. Let's start in the hot seat again. Mr. Colin, sir, what do you keep an eye on for the rest of this week until we all gather together on Monday, sir?
Yeah, so a couple of things I'm looking at. So tomorrow they got PPI coming out. So going to be interesting to see what happens with that. But the couple of things that really have been drawing my attention lately has been will the VIX futures kind of work their way back out of that? They're very, that backwardation that was been exhibited. It's such a weird curve right now, so it'll be interesting to see how that plays out, as well as the yield curve. I know that's really like watching paint, right? But it's been very interesting lately. The 10 and 2 about 10 bips from one another, and even the 3-month was challenging the 20-year yield. So it's going to be interesting to see what the action that we've had lately and the strength and rally that we've seen the last 2 days to see if it's going to try and pull out of some of that inversion that we've seen. And it's already been stated earlier, but I'm going to say it again. I'm watching the gold silver action. It's been exciting. It's quite the movement. And obviously the S&P is sitting at the 50-day moving average right now. So it's right at that level. So that's something I'm going to see how it reacts, see if it can really just push through that level and retake it, or if it's going to sit underneath it. It's going to be interesting to see how that plays out.
It will be interesting. Let's see if Uncle Mike's got anything interesting up his sleeve. Uncle Mike, what are you watching for the rest of this week into the weekend, sir?
Well, definitely SPX. I mean, with the markets moving like they are, we definitely could make another run at 3,000 again. I mean, we'd have to have a 70-point day tomorrow, so I know that's quite a ways away, but it's still around that level. Once again, like when we were on the 2,000 mark a few years back, we stayed around that level for a long time, and that seems to be what is happening, and at least so far around the 3,000 level anyway. Watching silver, just like Colin, I think it's very exciting to watch that right now with everything that's going on. And then just watching a certain Twitter account to see if who we're at war with next, or who's the next enemy that we have. It was China, now it's the Fed, and we'll see what's going on with it.
Who we're picking a tariff fight with next. Mr. Rock Lobster, take it home, sir. What are you watching for the rest of this week into the weekend, sir? At least until Vol Views tomorrow.
I like my Fidelity compatriot there with the funky curve. Yeah, we got funk. As long as the curve is funky, I totally agree with them. How is it going to settle out? Where is it going to? Because it's, to me that curve is still showing some confusion, and we could be just as easily up 40 handles on tomorrow as down 40 handles. So it's a very still funky curve. There's some opportunities because you think of this and it's like, okay, is there anything really wrong? Well, two guys are arguing. It's kind of like December. I think the rate thing has kind of been settled, meaning the U.S. is going to keep rates fairly low. That should be good for stocks, as long as we don't go into this crazy European thing where they just, you're getting. I don't even know how to describe negative interest rates. It weirds me out. But anyway. As long as people can suspend disbelief over that, lower rates should be better for stocks, but we will have that tweet volatility number is still there. It's not going away.
Lower rates better for stocks. You heard it here first from the Rock Lobster, sir. But you're right, that curve. We got some funk there in that curve. If you like all that good stuff, then of course join us tomorrow noon Central. Actually, sorry, 1 p.m. Central. That's the old time. It was noon. Now 1 p.m. Central. For Vol Views. And today, of course, take a break, get a beverage, come back in about 25 minutes or so for TWIFO. We'll be hitting all that good stuff on equities and volatility, but also probably some crude, probably some gold. Those two are the big movers of this week, and as well as some other fun stuff. Your questions, all sorts of good stuff. The skew, the vol, the most actives, all that goodness. We'll hit on it and more. But before we do that, let's go back around the horn. Let's go back the way we just came. Let's start with the Rock Lobster, sir. If people want to get more of that good old New England down-home wisdom, sir, where should they go? What should they do?
Go to optionpit.com, look at our membership page, become a mentee, a student, learn how to trade all this vol stuff. We can teach you how to manage a portfolio of options against your stocks, trade volatility, whatever you want to learn how to do, we can help you. Oh, and Mark's got a webinar tonight.
There you go. OptionPit.com is the place to go to learn more. Check them out on YouTube while you're at it as well. The Option Pit over there. And Mr. Uncle Mike, sir, if folks want to get a credit for Option Pit, where should they go?
stcharleswealth.com. Look up my information. Give me a call. If you become a new client, I will give you a $100 credit for anything Option Pit. A lot of exciting things going on at St. Charles Wealth with markets doing what they're doing. Give me a call. We'll talk about rolling puts and buying calls.
You can also choose, if you are so inclined, to get that $100 credit in Skippy's Euro and Lemonade dollars. That's a good one. You may want to consider that as well. And last but not least, Mr. Colin, sir, if they want to kick the tires and light the fires over there in the land of Fidelity, where should they go? What should they do?
Yeah, so definitely check us out on fidelity.com/options. Goes over all the tools as well as the services, including our desk. Virtual coaching sessions that we run, roughly 2 to 3 classes a day. We do have some 4-week courses to help you even with the basics of options. So don't forget, we also have individualized appointments that you can call in. You could run your strategy by us. We're here to help you out in any way that we can. So give us a call at 807-977-4429 and ask to speak with a trading strategist, or even ask to speak with me. We're here to help you out.
There you go. Ask for the man directly. Colin, Song of Ice and Fire, Songer, over there. He'll get the love. He'll love it. So, Colin, I didn't know you guys can schedule individual appointments. So there you go, listeners. If you are a Fidelity client, maybe on Kick the Tires, go to fidelity.com/options first, and then schedule an appointment with the Song of Ice and Fire himself, with the rest of the crew, Brian, the Last Emperor, Trey, all those good guys. You know them all. You love them. And on behalf of all those guys and the Rock Lobster and Uncle Mike and indeed myself, thank all of you for downloading, streaming, and subscribing. If you're listening live, we'll pump some good stuff in there for you. Maybe some, you want to get a little bearish on Uber? I think we got something like that for you can listen to, and some other good stuff, maybe a little bit of crypto. And then we'll be back in 25 minutes to talk all the good stuff in the commodity vol side of the fence. So some gold, some equities, some crude, all sorts of crazy stuff. We'll see on TWIFO. Otherwise, we'll see you back here tomorrow for Vol Views, 1 p.m. Central. And then next week, we'll do it all again, noon Central, for the option block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.